cards 101. Why cards? What's the opportunity? The card schemes, that have the card brands, and then do the scheme rules and all that. Who else do we have, and how does that affect fintechs coming into this value chain? For people that want debits, not prepaid, do they need a processor as well, or do they just rely on the banks for everything? So let's jump into the meat of the conversation very quickly, right? And I'd like us to start off by a mini crash course in payment. So let's do cards 101. Everybody here would like to know what the opportunity is. So let's attack things from first principles. Why cards? Like, why is it necessary? Why isn't mobile money, enough for us in Africa, or even agency banking, perhaps without cards? Why cards? What's the opportunity?
I think when I talk to clients, I always like to tell them about the payment ecosystem to understand where it starts from. There's a four-party model, which is the acquirer, the issuer, the merchant, and the card holder. Now, if you look at what cards represents, it's actually quite amazing. I can take a piece of plastic and go anywhere in the world and use that plastic to pay for something. Just imagine, I could be in China now, and I just take a piece of plastic out of my hand. I don't speak Mandarin, I don't speak anything. Go into a shop, point and say, yes, how much? Slot it into a machine, something happens, and I walk out. So the reason why cards is so unique is because it has that global appeal. Other payment methods are good as well, but there's nothing that quite cuts across the whole world as cards, today, which is why everybody wants to get into it, because you have a vehicle that automatically opens up the entire, globe to you from a payment standpoint. So today banks traditionally have been, issuing of cards, and back in the day, cards was a cost center. It was done purely just, as a service. Let's just give them cards. Then people started to understand that, okay, it costs a lot to serve people in the branches. Can I give them a card so that they don't have to come into the banking hall? That was just the thinking then. And as you know, it started with on-us transactions. There was no interoperability. Banks were giving their own cards. You could go to your own ATM and withdraw. Then the interoperability came. Then I could go from bank A to bank B and withdraw. But at the time, it was still essentially an ATM card, which is why today you still, have people calling it an ATM card, because, that was what, happened. You'd have people who would go to a shop that had a POS, they'd go to an ATM, withdraw the money, and then come and pay in the shop, even though they have a POS. So the mentality then was just an ATM card. Although things have changed now, we have a lot more POS terminals, across not just Nigeria, in Africa. So that the use of the POS as payment, not just a withdrawal, is increasing. Now, what has skyrocketed that use is the COVID lockdown. If you look, before COVID, you have the numbers from, if you have, NIBS, they'll tell you what their numbers are. But all of a sudden, people couldn't travel, people couldn't go out, but then e-commerce just started to skyrocket, really started to skyrocket. Before, if you see POS transactions, it's physical POS or people traveling. But now, over the COVID, people realize, what, I could actually shop online. And that has, created this demand for more of it. And that's where we're seeing everyone is coming to the party, especially fintechs. Fintechs tend to run a closed loop system. They have an ecosystem where they're able to onboard 5, 10, 50,000 customers, bill payment, value-added services, etc., whatever it is that they're offering. But their customers also want to be able to shop online. They also want to be part of the payment ecosystem. Now, if they don't provide that, the customers will go somewhere else and get it. So imagine I have 5,000 naira in the fintech wallet,
Uh-huh.
you know. Now, if I want to go and buy something that requires a card, I have to take that money out, go and get a card from somewhere else and use it. So I've lost sight of that money, you know. I can't keep a hold of my customer's money if he has to cash out from my network. But if I give him a card, whether it's a physical or a virtual card, I'm keeping my hand in his pocket because the card is my card. And every time he uses it, you know, there's a transaction fee, and somewhere along the line, I'm getting paid, you know. So it's that whole desire to make sure that, first of all, you're offering a service that the market wants, but you're also doing it from a revenue standpoint as well. Because the more you keep hold of your customers' funds, or at least you can see what they're spending their money with, you're able to make more money. So it's more like you have to do it because that's the trend that we're seeing now, you know, the customers. Yeah.
Interesting stuff. If we can delve a little bit more. So, I mean, you've correctly said that fintechs are very interested in extending their ecosystem so that they have a share of the customer's wallet by the cards. What kind of stakeholders we have in the issuance ecosystem? So we know the card schemes, you know, that have the card brands, you know, and then do the scheme rules and all that. Who else do we have, and how does that affect fintechs coming into this value chain?
Yeah. So, I mean, if you look at on the issuance side, obviously we have the banks who are the issuers. We have the scheme. We have what we call the processors as well, which is, you know, what GTP does. We have the regulators as well, you know, who regulate everything, you know, who can issue cards, who can do this and who can do that. So when a fintech comes into, you know, they want to do cards, they tend to think it's as easy as actually getting a card from a bank. You know, they think, I just go to a bank and say, give me a card. Oh, give me 100 cards, give me 5,000 cards. Because everyone's used to walking. Well, if you have a bank account, it's easier. You can just walk into your bank and get a card. So they have that mindset, not realizing that there are a lot of stakeholders involved. You know, so what we try to do is we try to break it down to them to say, yes, you can get cards, but you have to put everything in place. So the first thing, obviously, is you need a BIN sponsor, which is what the bank is. In Africa, only banks, well, I'd say that's about 99% true. Only banks really can issue payment cards. Okay. So whatever kind of card you want to do, you need a bank somewhere to sponsor the BIN. And what is a BIN? I mean, I know we have some experts on, but a BIN is just the address of the bank, okay, that issues the card. And I always liken a BIN to like a mansion. You know, a mansion has 100 rooms. One BIN can take, I think, 1 billion cards. You know, so when we're talking about BIN sponsorship, we specialize in, you know, doing BIN ranges, simply because what I need is a room in your mansion. I don't need the whole mansion to be able to issue my cards. So those are the kind of things that we tell fintechs. Some, the bigger ones say, oh, give me my own BIN, give me my own BIN. I don't want to share. I say, oh, God, relax. You know, you know, because there's a cost side to it as well. You know, so you understand. You let them know that yes, you do need a BIN sponsor. Then you need, if it's a prepaid, you know, you need a processor. You know, typically to process your transactions for you, which is where, you know, GTP comes in, that kind of stuff. If you're doing physical cards, you need someone to produce the plastics, you know, because that's a cost as well that, you know, hasn't been factored in. You need to talk to I wouldn't mention the name just because I'm advertising for some people, but you need to talk to the card vendors, you know, they're also there as well. You know, so once you have all of that, then there's also the project side of things, getting the project up and running. You know, though, yes, you have a BIN sponsor, the schemes also have to approve that program. You know, they need to understand, especially once it's a co-brand, the schemes always want to ask a lot of questions around KYC, sanction screening, you know, anti-money laundering. They want to know does this fintech understand this business? Does this fintech understand the risk around cards? And, the spectrum goes from left to right. You have some that know absolutely nothing about cards. And then you have others who, yes, because maybe some of their founders have worked in payments for a long time, so they have a good understanding of it. So when you do have the people at the other spectrum where they don't know much, you tend to have a lot more scrutiny over their internal workings, because fraud is very, very prevalent. And if you're working with a fintech that doesn't understand the risks associated with that, you run a program and the next day everything is compromised, and everybody is crying that people have lost money. So we try to sort of walk them through each of those stages, and then finally we situate on the P&L side of things. I was talking to somebody the other day, and again, people always approach us, they want to issue cards, and so I started asking questions. What are your plans? How many cards are you going to do year 1, year 2, year 3? How are you going to price the cards?
Can I interrupt you just a bit before we enter this part of it? So I want to just make sure that we have the product side or the tech side, properly understood. Back to that product tech side, you mentioned that for those that want prepaid, they'll need a processor. For people that want debits, not prepaid, do they need a processor as well, or do they just rely on the banks for everything?
Well, the banks rely on processors. So even if the bank is doing a debit card, there's a processor. Just little backtrack. The difference between a debit card is that it's linked to a savings or current account. A credit card is a bank is giving you a loan and you can access it via the card. It's a revolving credit. And then you have a prepaid card, which is not linked to a savings or current. It sits on a card management system of the processor. So the credit card is, by its nature, especially in Africa, a smaller volume in terms of issuance. The debit is the most widely issued card because typically people give it because you have a bank account. So the prepaid, you have to sell it. But the beauty of it is, because you don't have to have a bank account, it's a great tool for financial inclusion. You can actually use it to bring more people in. So yes, and all of these three cards have processors behind them. In some areas, some banks do their own processing in-house, but generally speaking, whatever card they're using, there's a processor behind it. Yeah.
Awesome. Thanks for the clarification.